a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Let's get the spoken word now on the stock market, as we do periodically with our chief equity strategist, John Blank, who just happens to be sitting right next to me once again. One of his rare guest appearances here on the Zacks.com website. All right, so in your December market strategy, you wrote late year markets like to stage a Santa Claus rally. Well, certainly the investors like it when that happens, but given all this grinding and volatility that the market's been going through, John, what if Santa Claus doesn't show up? Does that mean that the bulls have something to worry about?
We're in a stabilizing market. Let's call it a stabilizing market to not sound too pessimistic. And what that means is we have some real positives showing up at this time of year. We have the look into 2016. We have people who have money to put to work. We have a decent level of valuations on a forward look. So we have some optimism on that's keeping the market coming back. And on the downside, we continue to have this pressure from the energy and materials sector, which we all know about, nothing new, but it has layered in a layer of fear of what can come from those falling prices, not necessarily from the energy and materials sectors themselves. So when you have fear, you have something that is very hard to quantify, and that's the volatility that we're seeing. Pullbacks that are pretty large, then they rally when the optimism shows up. But when you, like you said yourself, who knows where this is going? What that really means is we're seeing this tug of war. And it is not clear day to day or even over a couple of weeks where it's going. But when we look over a month, we're back to 2,100.
All right. So any rally that happens between now and year end would be based on the optimism.
Right.
Is that what you're saying?
Exactly.
Okay. Let's take a little bit of a look ahead into the new year, 2016. You and I were on a conference call recently, and you laid out a pretty detailed scenario of what's going to drive our stock market in the new year. You say it's the global markets.
It is the global markets. If you look back to 2013, we had 30% returns. You look to 2014, we had 11% returns in the S&P. 2015 is going to be a zero. A full-on stabilized market, no returns to the stock market. And if you look at what took it out, it's all this energy, materials, the renminbi valuation, the devaluations of the euro, the devaluations of the yen, all of this pressure from the QE in Europe, the Chinese manufacturing malaise, everything is coming at us from outside this country. And even though we're only 30% exposed to the S&P 500 to all this, it's that layer of uncertainty that comes and expands the amount of pressure it's putting on the S&P 500.
So foreign markets, most important to keep an eye on, even more so than the Fed.
Absolutely, because it has two variables. One is it's got to be where the growth is and where the strength comes back, which we got to look for a catalyst. And the other is we got to figure out what puts the fear to bed. And that's a nebulous idea, but clearly when the markets start to rally and we see some momentum in the international markets, broad momentum at indexes, indexes of Europe, indexes of Germany, index of Japan, Chinese rallies, that will put to bed this fear thing, which is on top of this fundamental worry. And the fundamental worry is keeping down that part of the valuation equation. But the other part is just the expansion of valuations that are compressed in the international markets. They got to come back. And when they come back, I think everything in the United States stock market is going to rise too.
You're pretty certain about this global scenario affecting our U.S. market. Would it be possible for our market to just decouple from what's going on overseas?
It decoupled all the way up to 2014. That's the thing. I don't know when we're fully valued and the Fed is raising interest rates, that's giving a pullback effect from the United States. We don't have a valuation pull, and we don't have a fundamental driver out of the interest rate, so we have to find something. So the answer is, in the old times when we had enough things to offer the market, we could decouple. Now I'm not so sure, and I think the market's not so sure. And again, it's the uncertainty and the fear that's being layered into this thing.
All right, for the meantime, let's take a look at some sectors or industries that are doing well as far as the Zacks industry rank is concerned. Top one, semiconductors remain strong.
Semiconductors always remain strong. Internet of Things, very strong. And the country of Taiwan. You're seeing more and more emphasis on research out in Taiwan. I heard just today that the Apple is putting together a new secret iPhone team to build a new screen there. So again, semiconductors in the wireless stage of life that we're in, the Internet of Things that expands that into all equipment across the stage, all of that needs semiconductors, and that business keeps being strong.
Stock pick there?
You have to like Avigo Technologies, AVTGO, which is a large cap stock. And anytime that stock pulls back, I think it's worth a buy.
All right. You also say consumer discretionary, very attractive.
Absolutely. I mean, you still got to like consumer stocks because they're still consumer spending is still 70% of the story, and it's still what's driving the stock market is the story of expanding consumption. I like FTD, which is a typical internet company, very old school, but it's got a lot of brands underneath it, and the stock sold off very, very heavily. So you got a chance for an entry play on a stock that's kind of overlooked. Another stock we haven't talked about, Terry, that I like is the healthcare sector.
Okay.
This is something that's sold off a lot, but we're seeing lately some resilience in the interest of investors. And this has the demographic story, the fundamental story, and now with all the short selling and all the worry over the last few months, we've got some valuations in play. So I think the other place to look for is a healthcare stock, and I'll throw a name out there, AMSURG,
okay.
Ticker AMSG. This is a outpatient specialized surgical services units that are put into hospitals or next to hospitals. They're doing quite well, and this is playing on the aging population and all the needs that are arising from the baby boomers as they get older.
Do you own any of those stocks?
I do not.
All right. Well, John, we always appreciate getting the spoken word from you. In the meantime, if you want to check out other stock commentary, stock articles, get on over to Zacks.com. If you're not there already watching this video, you can link to a lot of important information and interesting information right off the home page. Now, a reminder, if you're watching our videos on the YouTube platform, there is where you can subscribe to them and even comment on them, and the feedback is always welcome. With John Blank, I'm Terry Ruffalo.